While the average investor struggles to keep pace with the market, Warren Buffett, the Oracle of Omaha, has built a fortune exceeding $100 billion. What's the secret sauce? It's not about insider information or magic tricks. It's about a disciplined approach built on timeless principles, and the good news is, you can master those principles too. Forget the fancy financial jargon and overnight schemes. Building wealth, like building a tree, starts with strong roots. By adopting Buffett's time-tested principles, you can create a robust investment portfolio, one that can weather any market storm like a majestic oak. So, are you ready to ditch the maze and build your own path to financial freedom? Join me as we explore 5 key investment strategies inspired by the legendary investor himself. With these guiding principles in hand, you'll be equipped to navigate the market with confidence and pave the way for a brighter financial future. 1. Embrace value investing. Value investing is a strategy that involves buying stocks that are undervalued by the market, meaning they are trading below their true worth. By doing so, investors can benefit from the potential increase in the stock price as well as the dividends paid by the company. Some of the key aspects of value investing are: focus on intrinsic value. Intrinsic value is the estimated true value of a company based on its assets, earnings, growth prospects, and competitive advantages. It is different from the market value, which is the price at which the stock is traded on the market. Value investors seek companies that are trading below their intrinsic value, offering a margin of safety. This means that even if the market value drops further, the investor is still confident that the company is worth more than its current price. Seek stability and value. Not all undervalued stocks are good investments. Some stocks may be cheap for a reason, such as poor management, declining industry, or legal troubles. Value investors look for companies that have strong balance sheets, stable earnings, and sustainable competitive advantages that can protect them from competition and market fluctuations. These factors indicate that the company has a solid business model and can generate consistent cash flow and profits over time. Value investors also look for companies that pay regular dividends, as this shows that the company is confident in its earnings and willing to share them with shareholders. Coca-Cola. One of the most famous examples of a value stock is Coca-Cola, which has been a favorite of Warren Buffett, the most renowned value investor of all time. Coca-Cola is a global leader in the beverage industry, with a portfolio of over 500 brands and products sold in more than 200 countries. While not experiencing explosive growth, Coca-Cola offers a long history of consistent profitability, strong brand recognition, and a loyal customer base. The company has a wide moat, meaning it has a durable competitive advantage that makes it difficult for rivals to erode its market share. Coca-Cola also pays a generous dividend, which has increased every year for the past 59 years. Trading below its intrinsic value based on its stable cash flow and dividend payments, Coca-Cola presents a compelling value proposition for long-term investors. 2. Prioritize quality over growth. Growth investing is a strategy that involves buying stocks that are expected to grow faster than the market average, meaning they have high earnings growth rates, revenue growth rates, or market share growth rates. Growth investors hope to benefit from the appreciation of the stock price as the company expands its business and increases its profits. Growth investing can be exciting and rewarding, but it also involves higher risks, as growth stocks tend to be more volatile, expensive, and sensitive to market conditions. Some of the key aspects of quality investing are: don't chase hype. While chasing high-growth stocks can be tempting, especially in times of technological innovation and disruption, quality investors prioritize companies with strong fundamentals and consistent profitability. Quality investors look for companies that have a history of generating cash flow, reinvesting it back into the business, and rewarding shareholders with dividends. These factors indicate that the company has a sustainable competitive advantage, a loyal customer base, and a disciplined management team. Focus on sustainable growth. In 2024, quality investors should prioritize companies that demonstrate sustainable growth, not just those that experience temporary spikes in earnings or revenue. Sustainable growth means that the company can maintain or increase its growth rate over time without compromising its profitability, quality, or competitive position. Sustainable growth also means that the company can adapt to changing customer needs, market trends, and technological innovations without losing its core values or vision. Johnson & Johnson. Rather than jumping on the latest fad, quality investors should consider companies like Johnson & Johnson, which has a proven track record of steady, consistent, and sustainable growth. Johnson & Johnson is a global leader in the healthcare industry with 3 segments: consumer health, pharmaceuticals, and medical devices. The company operates in a stable industry with recurring revenue streams and a diversified product portfolio, offering a range of products and services for various health needs and markets. Johnson & Johnson has a history of increasing its earnings and dividends for over 50 years, making it one of the most reliable and resilient companies in the world. 3. Embrace long-term investing. Long-term investing is a strategy that involves holding stocks for a long period of time, usually more than 5 years, regardless of the short-term market fluctuations. Long-term investors believe that the intrinsic value of the company will eventually be reflected in the stock price, and that the long-term returns will outweigh the short-term risks. Some of the key aspects of long-term investing are: ignore short-term noise. Long-term investors ignore the short-term noise that can affect the stock price, such as market sentiment, news events, analyst ratings, or earnings reports. Build a diversified portfolio. In 2024, long-term investors should avoid chasing trends or hot stocks. Instead, they should focus on building a diversified portfolio of quality companies that they believe in for the long term. A diversified portfolio means that the investor holds stocks from different industries, sectors, geographies, and market capitalizations, as well as different asset classes, such as bonds, commodities, or real estate. A diversified portfolio reduces the risk of losing money due to a single event, company, or industry, and increases the chances of capturing the returns from different sources of growth and value. Amazon. Instead of trying to time the market, long-term investors should invest in a company like Amazon and hold it for the long haul. Amazon is one of the most successful and innovative companies in the world, with a dominant position in the e-commerce, cloud computing, and digital streaming industries. Amazon has consistently reinvested its earnings back into the business, expanding its product offerings, customer base, and geographic reach, disrupting various industries and creating new markets along the way. Amazon has also diversified its revenue streams, generating income from various sources, such as advertising, subscription, and web services. Amazon has grown exponentially over the past 2 decades, delivering impressive returns to its shareholders. While its stock price has fluctuated, long-term investors have been handsomely rewarded for their patience and faith in the company. 4. Seek out companies with strong management. Buffett emphasizes the importance of competent and honest management. Look for companies with leaders with a proven track record, ethical business practices, and a clear vision for the future. In 2024, assess the capabilities and integrity of management before investing in any company. Examine their financial decisions, communication style, and track record of shareholder value creation. Berkshire Hathaway. Consider investing in Berkshire Hathaway, led by Warren Buffett himself. Buffett's long-term vision, ethical business practices, and capital allocation skills have significantly contributed to the company's success. Investors trust his judgment and believe in his ability to navigate complex market situations. 5. Consider inflationary trends. With rising inflation, it's crucial to invest in assets that can withstand its impact. Consider companies with pricing power, the ability to pass on cost increases to consumers, and those operating in sectors that benefit from inflation, such as commodities and energy. Real estate and commodities can also be valuable inflation hedges. Gold, a traditional hedge against inflation, has historically maintained its value during periods of economic uncertainty and rising prices. 6. Stay disciplined and avoid emotional decisions. Buffett emphasizes the importance of remaining calm and rational during market volatility. Avoid panic selling and chasing short-term trends. In 2024, stick to your investment plan, make decisions based on logic and analysis, and resist emotional reactions to market movements. During the 2020 market crash, many investors panicked and sold their stocks at a loss. However, Warren Buffett remained calm and even increased his buying activity, recognizing it as a long-term buying opportunity. In 2024, resist the urge to panic sell based on short-term market movements and stick to your long-term investment plan. 7. Diversify your portfolio. Spread your investments across different asset classes and sectors to mitigate risk. Consider stocks, bonds, real estate, commodities, and alternative investments, such as private equity or venture capital. In 2024, diversify your portfolio to protect against unforeseen market fluctuations and ensure long-term stability. Vanguard funds. Don't put all your eggs in one basket. Instead of solely focusing on tech stocks, diversify your portfolio across various asset classes like stocks, bonds, real estate, and commodities. Consider Vanguard Total Stock Market Index Fund and Vanguard Total Bond Market Index Fund for broad market exposure, and explore real estate investment trusts, REITs, like Vanguard REIT Index Fund for inflation protection. 8. Embrace continuous learning. Buffett is a lifelong learner, constantly staying updated on economic trends, industry developments, and company performance. In 2024, commit to continuous learning by reading financial publications, attending investor conferences, and seeking out diverse perspectives. Allocate time to read investment books like The Intelligent Investor by Benjamin Graham, listen to podcasts like The Meb Faber Show, and attend financial webinars to stay updated on market trends and develop your investment knowledge. Follow renowned investors like Warren Buffett to learn from their insights and perspectives. 9. Consider the impact of geopolitical risks. Global events and political instability can impact markets significantly. In 2024, stay informed about geopolitical developments and assess their potential impact on your investments. Consider diversifying geographically to mitigate risks and balance your portfolio exposure. Before investing in emerging markets, thoroughly research the region's political stability and potential risks. Consider the impact of trade wars, sanctions, and other geopolitical events on your investments. In 2024, stay informed about global developments and adjust your portfolio exposure to mitigate risks associated with geopolitical instability. Have you enjoyed this dive into the world of investing, inspired by the wisdom of Warren Buffett? If you're ready to take your financial journey to the next level, then subscribe to WealthPaths. By subscribing, you'll gain exclusive access to valuable resources and insights, including in-depth analysis of current market trends and investment opportunities, expert interviews with leading financial figures and industry professionals, actionable strategies and tips to help you build a strong and diversified portfolio, a supportive community of like-minded individuals who are also on their path to financial success. Whether you're a seasoned investor or just starting out, WealthPaths has something to offer everyone. Don't miss out on this opportunity to unlock your financial potential and join us on the path to wealth creation. Subscribe today and start building your brighter financial future.